Okay, so good morning, everyone. Welcome to the Macro Snapshot. It is Tuesday, June the 10th, 2025, recording this in the morning as always. Not a huge amount going on. The markets seem to be pretty much in a holding pattern, a waiting pattern. We've got the big CPI numbers coming in tomorrow. Although having said that, the market is expecting a number which is going to be relatively in line or possibly slightly soft. And the question really is, is that asymmetrical in the sense that the Fed, my point is that even if it comes in a bit soft, it's not necessarily going to radically sort of change the market's perception that the Fed will suddenly have to start cutting and be super, super dovish. The Fed will want to see multiple months of sort of soft data in terms of CPI, and probably more importantly, it wants to see some kind of resolution or more understanding of what's happening with the tariffs. On the other hand, sort of a hot number, we know that it's a bit sticky, and the Fed, the market has already repriced in a fairly hawkish way. We're down to less than two cuts by the end of this year. So I'm just curious about how much of reaction the CPI will get tomorrow. Of course, there's always the possibility of an outlier. But apart from that, the other big news we're looking at is really just the China-US talks. They've gone into a second day at Lancaster House in the UK. And there's been some pretty positive sort of comments out of that, especially on the American side. Both Besant and Lutnick, the sort of the trade negotiators there, are saying that things are moving. China's a tough negotiator, and it seems to be that really what's going to be in play here is that the Americans want the Chinese to release more of the rare earth minerals which they need for a lot of especially military applications and energy applications, and the Chinese on their behalf, they really want the Americans to enable the export of the most sophisticated sort of chips from companies like Nvidia. So those seem to be the two big bargaining chips. Is this going to move the market? We'll have a look at the charts in a second, but basically we've got a fairly sort of low volatility situation at the moment, and you can see here, just bring this up quickly. If you look at just the trends in the FX space, for example, over the last couple of weeks, you see here the dates on the left. You can see that the trends are very there's not really particularly any strong trends, probably just with the exception of silver here on the right, XAG. You see that silver, we know silver's had a huge sort of breakout for 3 or 4 days, so that's a strong sort of upward trends. But apart from that, we can see that gold is really sort of stabilized, and we can see that in the Antipodean currencies like the AUD and New Zealand, not much happening. Canada, not much happening. Everything's below one, which on this metric here, you want really to look at +5 or 6 or 7 for strong trends. So very slow trends. Japan is going down a little bit, but nothing too strong, and the US dollar is sort of weakening, but off those sort of the strongest levels of weakness we saw a few weeks ago. So overall, FX space is pretty calm. And that's interesting because that brings, when there's low volatility in the FX space, and I was looking this morning at a global FX volatility indicator, which is actually very low. That means the carry trade comes in. But it's kind of interesting because if you think about for the dollar bears, let's say, for example, you're short the dollar. One of the things you have to keep in mind that every day you're short the dollar, remember that the dollar, the proxy, so the interest rates is, let's call it over 4%. So if you're short the dollar, let's say something like the JPY or let's say the euro, the interest rates you're getting there, the carry is really not in your favor because basically you're receiving a low carry and you're paying out a much higher carry. So the point is that when we have this low volatility, that does favor the carry trade, but really only for currencies like the Brazilian real or the South African rand or the Mexican peso. These currencies are paying, sort of 7, 8, 9, 10% on an annualized basis. And so that makes sense to be, funding those with sort of low yielding currencies and sort of buying those currencies. So that's pretty good for the emerging markets FX space. But in something like for the dollar bears, it's actually a little bit painful as the longer time goes on, because as I said, remember that you're essentially paying the cost of carry there is quite a lot. Okay, so let's just actually look at a couple of the charts and see what's happening here. And so my point is, just to get back to that, is that if you're, let's say, a dollar bear, and we'll go here to, let's just bring this up. We'll go to the dollar index here. Let's have a look. If you look at the dollar index here, essentially, it's not that it's a strong chart. I've just got the 50-day moving average here. You see the sort of purple line. So, it failed at the 50-day moving average. It failed, pretty recently at this sort of downtrend. It also failed beforehand at the Fibonacci level. So all of the technical hurdles are being failed by the US dollar. But the point is that it's not also collapsing. So again, as we grind on anyone in an option structure or carry structure, you are slowly being ground down. And it seems to me that the dollar bears in order for this dollar to have more weakness, there needs to be another catalyst. There needs to be a steady drip of kind of bad news, which will push this down, at least to retest these recent lows. So in the moment, sort of just grinding sideways. And we're seeing that if we look elsewhere, let's look at the Euro index here, the EXY. Again, it's fairly strong, but it's nothing sort of particularly for a new catalyst. So if you look at a couple of the other things, we look at, let's say, USD JPY. Again, on the 50-day moving average, the US dollar tried a little bit of an attempt there, but basically failed. We can also see at this most recent fib retracement, this most recent impulse here, kind of failed first of all at the 61.8 fib, now at the 50% fib, which also coincides with the 50-day EMA. So the point is that the US dollar definitely not strong, and it looks like in the USD JPY that we are kind of getting towards a tighter and tighter range here. So there could be some kind of breakout. Who knows? Maybe it's going to be the CPI. Maybe it's going to be positive news about from the US China talks. That could be a positive for the US dollar if a lot of those sort of tariff tensions are relieved. Just finally, if we have a quick look here at the Euro USD, similar to the Euro index, you can see here that for sure this is in an uptrend, well above the 50-day moving average here, and about to retest the highs. And for sure this is a bullish chart, but just in order to pop higher and break these recent highs, again, it would probably need some kind of specific catalyst, which we're not getting in the short term. Something else I'm looking at here is the oil chart, because another sort of interesting thing which is going on at the moment is the negotiations. We're into the sixth round of nuclear negotiations between the US and Iran. Just a second. Excuse me, I need a sip of tea in the morning. You can see here that oil is broken up, and basically those sanctions. The Iranian lawmakers this morning, I was looking at some headlines, basically warning their own negotiating team that the US was trying to trap them and not to give away too many concessions. So the point I'm trying to make here is that I'm not sure how quickly or indeed whether we at all will get some kind of breakthrough and some kind of nuclear deal between the US and Iran. And as long as we don't have a deal, there's the possibility for the oil market that sanctions remain fairly strong on Iranian oil, even though, of course, they're selling everything illegally. But the point is that on the open market, they still are heavily sanctioned. And so as long as that remains in place, oil is sort of grinding upwards. And it's also grinding upwards because there's a lot of short interest. If you look at like the commitment of traders reports, which I was looking at, they in the last 24 hours, the market is very, very, very short. So, anyone who's, let's say, has a stop loss here or was short here, these kind of people are starting to be squeezed and are exiting. And, there could be just a bit of a short squeeze here. But we are getting to quite an interesting technical point here. As you can see, we've got above the 50-day moving average, hung around there for a couple of days. So that's a positive. But now we have horizontal resistance. You see this pretty important level here at about 65, let's call it 65.30. But also you see this gray line. It goes back quite a long way. It's a bit of you see this sort of trend line here is like a bit of a sort of a support level here, which is also now overhead resistance. So that's quite a key line. So probably the oil market today, in the absence of any news from Iran or from China, of course, anything positive from the China-US tariff talks would, in theory, be a positive for oil. So what oil needs to do here, it needs some positivity. And if it can pop above here, let's say another 50 cents or a dollar, that might break some of these. There's probably going to be a bunch of stops here, and it could sort of get on a bit of a short squeeze kind of roll here, which may also be supported by some positive news flow out of London with the US and China, and maybe even out of the talks between the US and China. And just having a quick look, we have a moment this morning. Let's just look at behind the scene a little bit on oil, and I've just got a few charts just to look at the spreads and a couple of things here. So if you look at the curve, which I'll just bring up here. So you see, this is where we are now, the live data. So you see on the WTI, we're trading at about 65 and a half bucks here. So you see the curve here, it's fairly much in a pretty strong state of backwardation. So the front contracts, well and truly above the further out contracts. So that's quite bullish. And you can also see that the actual outright price, this is from 1 week ago, is the blue here. So you can see that all of the price gains have indeed been, you see down below here, haven't on the differentials, have indeed been at the front of the curve. As you can see from a week ago, over $2, $1.50 depending, but really the gains at the front of the curve. So that's a positive there. We can also look at this is just the spread here between the Brent and WTI, the American grade. So of course, as you see here, the Brent is the white line here, and normally historically that trades with a premium over the WTI, which is still the case. But you can see here that the spread, just over the last kind of few weeks or whatever, going back to sort of March, April, but let's say especially in the last sort of 4 or 5 weeks here, you see that the spread in favor of Brent has gone from over $3 down to about $1.75. So that's indicating a bit more tightness in the WTI market, and that is also a positive sort of bullish sort of indicator here. The fact that the spread between the two is narrowing in favor of the American WTI. And just finally, if we look at the spread between CL1 and CL2, so the front contract versus the second contract, nothing crazy. Obviously, the outright prices above are going up, but we can see here that the differential, the spread, it's not crazy, but it's definitely sort of fairly solid, over $1 at this point, $1.07 as we're trading this morning. So the point I'm trying to make is here is that if you start looking at things like put to call ratios, and you start looking at the spreads and the shape of the curve and the differential between Brent and WTI, it's looking quite solid from a sort of a technical perspective in terms of that. Okay, the other interesting thing we've got today, we do have the first of the auctions. We have threes, tens, and 30s this week. We have at 1 p.m. the 3-year, which probably should go pretty well. But just in the absence of with sticky inflation, maybe the Fed not doing too much, it's going to be interesting to look at the indirects, which is of course a proxy for the foreign demand of US bonds. Probably going to be more important in the 10s and the 30s on Wednesday and Thursday, but let's see what happens today. And just talking about the Fed, the market seems to have settled in for the number of cuts this year of about 2. So at the moment we're at 1.8, so a little bit more hawkish. Sometimes it's going up to 2.1, but essentially we're around about 2 cuts, which of course coincides with the dot plot as the Fed at their last meeting, or the last summary of economic projections. They had signaled 2 cuts, so that's where the market is settled. And if we just see what's basically happening here, for example, you see after the non-farm payrolls on Friday, which we looked at, you see that we're at about 54 basis points of cuts, and the market's taken out about 5 or 6 basis points of cuts. And it's going up 1 or 2 basis points just at the moment, where not a huge amount is happening. So that's going to be kind of interesting to look at that. Just finally, let's have a look at a couple of other things. Just want to look at the equities. Now, the equities, we see that VIX, and I was just reading yesterday that the VIX crush, the volatility crush, has been the most. It's gone down this enormous amount, as you can see here, since the whole liberation, tariffs, and everything. This has been one of the most dramatic crushes or reductions in volatility, for the last 20 years or so. So this is pretty good. It's like a tailwind for the equities, and you can see here even the volatility of the VIX itself. The VIA VIX is actually very low itself. So you see the volatility of VIX has gone down. So VIX itself is not even moving that much. And if we just look at where the ES futures are, you can see for sure this is bullish. It's well above the 50-day moving average. It's beaten all the fibs. We're getting higher highs, higher lows, or sort of Fibonacci retracements have been bought, or dips have been bought. So just if we go through a checklist of sort of classical technicals, this is all pretty good. But what we can see here is that if you look at this latest impulse, let's say measuring from the 7th of May, you can see that the Fibonacci extension here does measure out to, a retest of the highs. So there's nothing at all to stop us from hitting up into the 61, 61.50 level, even up to 6,200. But at the moment, as you can see here, the energy is just kind of stalling out a little bit, which is not to say that this is a negative or bearish. It's just to say that the market is pausing and I guess waiting for a new catalyst, which, as I say, could be the CPI or, maybe even more importantly, the any news coming out of London and the tariff talks. But at the moment, equity is definitely grinding higher. If we look at the Nasdaq, we can see it's even a slightly more bullish chart. This almost up towards the recent highs. If we look at the Russell, the small caps, they've also been doing quite well, and they've actually broken out of this fib retracement here, which was quite an important resistance at 21.25. So they've broken above. Again, not nearly as strong as the ES or the tech stocks, the Nasdaq, but nonetheless, the breadth here is not too bad. And if we actually look at just a couple of other indicators, we see Mag 7 looks like it's been in a sideways consolidation, but this does look as though it's ready to go and might break up a little bit higher. And if we look at the equal weight here, the RSP, which is the equal weight, again, not as strong as let's say the Nasdaq, but still sort of grinding higher. Just talking about something which also is grinding high, I just want to have a quick look at Bitcoin. It bounced again, just in terms of sort of risk assets and whatnot. It is interesting to look at the BTC, which we have down here, and you can see that it bounced off its fib level here, down at basically $100,000 and $200 or so, and which is also the 50-day EMA, and it's had a couple of very very strong days, a few strong days here, and retesting the highs. So at this point, if you want to look at a measured move on a larger scale measured move like a Fibonacci kind of extension, we can go down here, and if we go all the way back down to this kind of retracement and then measuring it out, if we go all the way back down to August, September of last year, you can see that there's nothing at all technically to stop Bitcoin not only from testing its highs at 112,000, but maybe even testing up into 120, 125,000, or all the way up here, as this extended measured move. We shall see what happens. Okay, guys, I'll leave it there. As I say, fairly sleepy morning. The other thing, just in terms of the oil market, those looking at it, we do have the EIA STEO today, which is the short-term energy outlook. So that gives us a little bit of a read on at least where the EIA thinks the energy sort of demand is over the next month or two. Okay, have a great day. We'll keep the conversation going. Thank you.